So during the quarter that ended on March 28th, the Caribbean Growth Fund was up 3.5% and the World Growth Fund was up 3%. So this quarter, the broad US stock indices fell, but most of the weakness was among the larger tech stocks like the Magnificent Seven. So the weakness in US equities came as a result of concerns over Trump's tariffs, implications for rising inflation, and also recession fears. So these concerns eroded the previous America First gains that we saw in the US stock market during Q4 of 2024. In the US value stocks, and this is where the fund is invested via the US equity fund, performed a lot better than growth stocks. In international equities, these stocks gained in both local dollar terms as well as when converted to USD as international currencies strengthened this quarter. Chinese equities rebounded from the weakness in last quarter, and in the Caribbean, shares were mostly flat. But what helped the Caribbean Growth Fund do a little better than the World Growth Fund was Berkshire Hathaway. That stock has a 6% weight in the Caribbean Growth Fund, and that stock was up about 15% over the quarter. So that helped to give the Caribbean Growth Fund a little bit more outperformance than the World Growth Fund. Shifting a bit to bonds, the high interest fund gained about 1.5% during the quarter, and the World Fixed Income Fund was up about 2.3%. The recession fears mentioned before led to lower treasury yields in the US, and lower treasury yields saw higher treasury prices. But corporate spreads widened a bit, and that was a slight drag on corporate bond prices, especially in the high interest fund. So overall, we saw an unwind of the Trump trade from Q4 of 2024.